you have a buy rating on ASML. You have a price target of more than €1,000. What takes us there, Andrew?
Good morning. Thank you for having me. Yes, we continue to be bullish on ASML, and I would say, this morning's results and the orders in particular that you were highlighting with Henry just now are a step in the right direction in terms of the potential appreciation of this stock. I really think we've been on a journey over the last year in terms of resetting a base for 2026, and they have confirmed this morning that expectations are at a reasonable level. They don't want to yet go so far as to call out growth, but at least we're not going to decline next year. And I think that's removed one of the key uncertainties for the stock, and that's helped to get us to where we are today, just shy of €900. In terms of further appreciation from here, it's all about the growth beyond 2026, in my view. And that, really comes down to some of what you've been alluding to with the demand coming from the artificial intelligence players into the data center. Here, clearly there's a lot of momentum in terms of the news flow. ASML management were highlighting that just recently on the conference call. It's not yet fully reflected in their order flow, but it's something that we expect to come in the future quarters. And so it's really that momentum that will drive the stock higher.
I love that you say that, Andrew, because I pulled this part from your note, which I think was really important for our viewers, because in particular you say ASML acknowledged basically the momentum in the chip industry and market more broadly, but this is not yet reflected in firm orders, and there's a growing disconnect in the industry between the myriad of AI chip deals being announced and the amount of spend committed to these equipment companies. When will it show up? Are you really confident that it will show up? Because many are questioning the absolute financing of some of these orders.
Yeah, I think it's a critical question for this space. As has been talked about already this morning on this program, you're seeing all of these deals being announced by the likes of Nvidia, OpenAI, committing to certain volumes at AMD and Nvidia, the memory companies, and yet ASML. Sure, it was a healthy order intake of €5 billion, but nothing too out of the ordinary for them. Certainly they've had stronger quarters in terms of order intake. So I do think, given the lead times in particular, we are going to need to see orders pick up in the coming quarters in order to support the future demand that's being talked about by the artificial intelligence sector in particular. For example, ASML on the EUV tools that you've already highlighted, their lead times are roughly 12 months. Yeah. So even if you're ordering today in the fourth quarter, you're not going to get those tools until the fourth quarter of next year, ramping production into 2027. So the lead times are quite long, and therefore the supply chain needs to be prepared for that ramp to come.
Andrew, you don't cover the stocks in particular, but if you are thinking about an announcement coming from Nvidia saying we're going to be there with thousands of chips ready by 2026 to be put into whichever data center that OpenAI has just asked for, indeed AMD as well, do you think the backlog is there, that they've got the inventory to be able to sustain the 2026 dates that we keep getting from these companies?
So in terms of thinking through the supply chain, you take ASML as a critical supplier, the only one in the world who can supply the EUV tools that are necessary for many of these chips. They are close to, but not quite fully booked for 2026 deliveries. That will be the case by the end of 2025, given that 12-month lead time. And so really, the capacity that is already planned to be installed next year, sure, there could be a little bit of upside, but we're already getting close to the limits. And really, as I described earlier, what you're playing for is the growth into 2027. ASML management this afternoon here in Europe commented on the fact that they don't have perfect visibility because those orders aren't there yet, but they're acknowledging the growth in the industry, the demand that is coming, and they're trying to prepare themselves and indeed their suppliers to be able to make sure that they are not going to be a bottleneck into future years.
What was so notable about this quarter just gone that they reported on for ASML was the 42% exposure still to China in terms of revenue. How much smaller will that become eventually?
Yeah, so they have called that out in terms of the expectation for 2026 and saying it's going to decline significantly, unquote, into next year. I would say on a year-to-date basis through September, they're at about 32% of system sales into China. As you point out, that was higher in the third quarter at about 42%. So they're still generating very strong business in China at the moment. They're just saying, given the extended level of spend this year, last year, indeed the year before, that they think it should normalize into the future. At the moment, though, with the restrictions in the way that they are, the Chinese companies are ordering what they can. And so, yeah, we'll just have to see exactly how that pans out into 2026. The lead times for the type of tools that the Chinese customers are buying are not 12 months in the way that they are for EUV. They're much shorter, 6 months, perhaps even less in some cases. So again, things could change as we look into 2026.